Good afternoon, everyone. Welcome to today's webinar, Level Up Your Trading Acumen with 2 Powerful CQG Features. Today's presenter is Doug Janson. Doug is a CQG product specialist. Welcome, Doug.
Thanks, Tom.
My name is Tom Hartle. I am CQG's Director of Product Training. I'll be your host and moderator today. Before we get started, I want to mention a few housekeeping items. If you have any questions during the webinar, please enter them into the Q&A section window at any time during the presentation. Today's presentation is in 2 parts. We'll have Doug answer the questions at the end of each of his 2 presentations. If you're viewing the presentation in full screen, you can find Q&A in the WebEx toolbar at the top of your screen in the drop-down menu on the far right. If you're having any sound issues, please contact the host via WebEx chat. We'll be recording today's webinar and it will be posted within 48 hours to the events section on news.cqg.com. All registered attendees will receive an email with a link to the recording. Now, I'd like to turn it over to Doug.
Thanks, Tom. Let me go ahead and get my screen going here. All right, good afternoon, everyone. My name is Doug Janson. I'm a product specialist here at CQG, and we're going to talk about 2 features that are little known in CQG, but they've got quite a big impact if you can find ways to incorporate it into your own trading and research. We're going to take a look at DOM study values in our first segment, and then the second one we're going to take a look at the Signal Evaluator. And these are products that I use in my own personal trading, and I've just recently, we just recently had a revamp on the Signal Evaluator, so I want to certainly show that off because I think they've done a great job of bringing that up to speed, and certainly I think you guys will see the benefit once we're done with that. But let's go ahead and start off with the DOM study values, and simply the way that works, and this is one of my trading screens that I use for the first few hours in the morning when I do trade. And it incorporates a band around prices. As you guys can see, I've got a 2-minute crude chart on the left. I've got a 5-minute in the middle and a 10-minute. Actually, I'm going to turn that over to a 30-minute. We'll do a 30-minute over here on the right. And normally what I'll do is when I get signals, or what I consider these forecast points, and I enter the market, I will use the bands as a stop and a profit objective. So let's go ahead and take a look at what we have in the crude right now. Currently, we're coming off on the 2-minute, a buy forecast. The 5-minute is still in a buy, and the 30-minute is in a sell. Now, the 2 and the 5-minute are pretty close to their profit objective. Actually, the 2 is already through it. So let's go ahead and place a trade off of the 5. First, I'm going to go ahead and get into the market on the long side. Let's just buy 04s. And now, what I'll normally do, is I'll have the band values incorporated into the trading interface. To do that, you want to go ahead, Tom.
I think you might have the wrong monitor picked. I see one with orders and positions and monitors.
Oh no, let's change that around. Share my desktop monitor. Oh, thank you very much, Tom.
Now I have multiple crude oil charts. Thanks a lot.
All right, let's start over then. Thanks for pointing that out. So now we're looking at the screen that I was, of course, speaking off of. 2-minute crude on the left, 5-minute in the middle, and 30-minute on the right. I've got the DOM trading ladder in the middle of the window, and what I haven't done yet is incorporated these banding studies that I have into the trading interface. Now, anything that you guys pull out of the study values and put on a chart, when I say put on chart, it's got to lay over price activity. You can incorporate that into the trading interface. If it's in a subgraph, like an RSI, a Bollinger Band, or a MACD, they cannot be incorporated into the trading interface because they don't share the same scale with price. So currently, let's go to the 5-minute chart, and you can see I've got a band here. The upper band's sitting at 07, the lower band's sitting here at 98. I'm going to right-click on the labels, and I'm going to say show those into the trading interface. And you can see that now I've got 3 dots. I've got my midpoint dot, which is at 03. I got my upper channel or my upper band at 08 and my lower band at 97. Now the first thing, before I put in the orders on this, the first thing that you want to do is you want to determine how you want these to round relative to where they are on the chart. So I'm going to right click on any one of those boxes that represents that band, and I'm going to go down to the rounding. I always round away from current price. There's, you can certainly round towards current price, or you can use standard rounding that if it's a 0.5 or higher in the calculation, it's going to round up 0.4 or lower. We'll round down to the next tick. So once you establish that, this is a global setting for every market that you use. It will now, in this case, round away from the current price. So as you can see, we're currently long in one at 04. And then I want to put a sell stop down here at 97. So I'm going to right click on that box. And I'm going to say put a sell stop following that lower band. And then I'm going to put a profit objective up here at 08. Again, I'll right click on the box up there. And I will say go ahead and put a sell limit order. And you can see it's moved up to 09. These bands are dynamic. They do move with market activity. So these values or these orders will cancel replace as the bands, of course, calculate new values. So now that I've got these two orders in here, normally now I'll OCO these orders. The only way that you can OCO orders that have already been put into the market, you need to do that through the orders and positions window. And let's go ahead and open that up. And you can see here that I've got my two working orders. I've got my limit to sell at 09. I've got a stop working at 97. And then simply left-clicking on these chain links. The first chain link turns it on. Then I can associate additional orders with that first one. In this case, I only had one other order. And then I go back to the original chain link, left-click on it once again, and now I've OCO'd those orders. So now I've got pretty much hands-off on my trading. So this little bit of automation here is a nice thing to have. Once you've established a position, of course, I'm using the bands for a profit objective and a stop on the bottom here. Normally, I'll look across multiple time frames to see if I can go ahead and try to get a higher profit objective or a if I have multiple positions on. So if I add another one here, and actually let's see if we can buy 07s. We're getting awfully close to the profit objective on that 5. So okay, now we're filled at 07, so now we've got a 2-lot. And let's say, for example, I want to incorporate the 30-minute banding as a second profit objective. So I can right-click on that, and I can show that into the trading interface. Well, and I would say normally if you're new to this, I would change the color, and let's do that first. I'm going to go ahead and right-click on that higher box, which is the 30-minute. I'm going to remove it. And I'm going to change the color of the bands just so that it sticks out a little bit better in terms of knowing where that's at. So I'll right-click on the bands. I'm going to modify it. And let's just change the color from green maybe to a bright cayenne here. Once that's done, I'll right-click once again on the labels. I'll put it into the trading interface. And now I've got the 19 up here that I want to work as my second limit order. And then because I normally trade off of lower time frames and then shoot for higher profit objectives, I'm not going to put a stop all the way down here at 93.85. I'll use the 5-minute stop. I'll once again right-click on that box, and I'm going to do a sell stop following it. So now I've got a 2-lot working down on that 5-minute lower band. Profit objective at 09, which is the upper band on the 5-minute, and then for the second order, the upper band on the 30-minute. And again, I can go into the orders and positions and OCO these orders. Now, one additional feature that I do use that I haven't shown off yet is, as I mentioned, as these bands move, because the market will adjust them throughout the development of the bar, and they cancel replace themselves as the new values come in. If the market starts to move around quickly, normally the cancel replace isn't fast enough. For example, if the market moves up here and the band actually moved to 10, but it was a fast enough move in price activity, my 09 is going to get hit before the cancel replace can get it to 10. And in that case, I will sometimes work the order one tick better than where the band is. So I'm going to right-click on that order to cancel it. I'll right-click on the box, and this time I'm going to say, go ahead and put a limit offsetting the band. And if I use a positive number, it's going to put it one tick above the band, or X number of ticks above the band. If I use a negative number, it's going to be below the band. So now I'm going to place that order, and it's always going to work, in this case, 10s. If the band actually moves up to 10, it'll cancel replace up to 11. So this, as I said, any indicator that you use on the chart, on price activity, can be put into the trading interface, especially for the spreaders out there. This is a nice way that you can go ahead and band the market and have orders out there working based on Bollinger Bands, Kettler channels, and so forth. And since we're in a slow period of the crude, of course, I don't think we're going to get much trade activity beyond that. You can see our 2-minute is just starting to turn, 5 minutes getting late in its cycle, it's about ready to turn. And normally I would probably just cover this position right here and scratch it. And so let's just go ahead and scratch that. And then we'll just straight cancel all of the working orders by left-clicking on the sell button. And then that goes ahead and kills all those orders. So that's, again, DOM study values, and simply getting them into the DOM is right-clicking on the label values. And then to get rid of them, I've got 3 different time frames now working in the trading interface. I can right-click on any one of the boxes, and in this case, I'm just going to remove all 3 of them. And then at this point, I'll go ahead and open any questions up if you guys have any questions on the simple feature before we move into the Signal Evaluator. And what I'll do is I'll probably go ahead and start the Signal Evaluator. As the questions come in, I'll go ahead and answer them after showing you the Signal Evaluator. All right, so the Signal Evaluator, the most recent I used it was actually a few weeks ago. I came up with a filter, and let me go ahead and expand out this 5-minute crude chart here. The cycle down here, when it was what I considered in an alpha state, the filter turns it to a violet color. And while it's in a beta state, it's in a cayenne color. The alpha state, when I first put this on here, visually looked superior to the beta state in many instances of giving the forecast on the chart. And as I went back in time and looked through a lot of instances to where the violet came in or the alpha filter was present, the forecasts behind those alpha cycles, and simply the forecast is when the cycle turns up or down. The signals that looked like they were coming in when the alpha signal was on, they looked extremely good versus the beta signal. Again, the beta is in cayenne. And so a lot of times we have indicators on our charts. Visually, everything looks excellent, but we don't have a way to quantify what we're looking at. And so we've got a product in CQG that simply is going to allow us to quantify, is the alpha signals superior to the beta signals? In other words, has the work I've done putting this filter on this indicator given us good results or not? And so what we're going to do is we're going to go ahead and run this through the Signal Evaluator. What that does is it takes a look back in history at each one of these forecasts, and then it goes X number of bars into the future after each forecast to see how profitable it is. So, for example, this particular forecast that came in at 120 on the 15th, 1 bar out on a 5-minute chart, profitable, actually break even if you get down on the close. 2 bars out, break even. 3rd bar out, profitable. 4th bar out, profitable, and so forth. And so it will test into the future how profitable each one of these signals or forecasts are. And we will do it for the longs and the shorts. So what we're going to do is I'll go into the Signal Evaluator. And of course, as a user, you're going to have some code that's going to display some type of true or false condition on your chart to run this. So under our More button, and this is present in all versions of our CQG lineup, you go to the More button and down to Signal Evaluator. This is going to open up a window here, and at first it looks like it's rather complicated, but we'll slowly go through each one of the steps so you can understand how I put this together. On the left-hand column here, and this is going to be under the Results View Parameters, we want to state the 2 conditions that we want to test for. And I'm going to go ahead and just stick with what we have in here. So we've got the beta turns up, which is the up arrow when the cycle is cayenne. And of course, then we've got the beta turns down. We're going to enter on the bars close. We're going to do this for the crude market, not the Russell. And let's go ahead and test this. I'm going to say let's do it from December 1st of last year up until current. Because I trade during the primary hours and I'm not interested in the overnight activity, I'm going to pick the primary session, and I'm going to turn off the top session in the crude, and I'm going to turn off the overnight session in the crude. So what we've done so far is we've picked our two conditions that are going to get us into a signal. This is not a trade system because we really are not defining exits outside of time being our exit. Down here we've picked crude. We can actually do a portfolio here if we wanted to of a number of instruments, but I'm going to stick with just crude. We picked our start date, end date. The interval that we want to test is going to be 5 minutes. And then the sessions that we want. And then a little bit further down, I'm going to go ahead and go with active continuation and equalize the closes. Equalize the closes simply means close the roll differential between the 2 months when they roll. And then at the bottom of this window here, you'll see that we're going to evaluate 65-minute bars out into the future. And that's pretty much all the setup that we need. The window to the right of that is going to show all of our metrics here in a second once we get this going. So I'm going to left-click on Start. And once this data gets loaded, you'll go ahead and see it populating the window now. The lower half of this window is the actual trades and the time and the date that they fall in on. If it has a colored background, those are shorts, versus a white background, those are longs. And then our metrics at the top here, we've got 107 instances of long and short forecasts. And if I left-click on that metrics, it brings up a chart, and it shows us X number of bars into the future, how profitable are these long and short forecasts out of the gate. You can see here, roughly 2 bars out, or 2 closes out, we're up $3,700, and then you can see that we go back to break even 10 bars out on average, and then we go into negative territory up until 38 5-minute bars out. So it's not bad the first 2 bars out. You can see the ascension coming out of the gate. So the beta signals are decent in their own right. Let's go ahead and run the alphas and do a comparison between the two. Again, this is 107 trades or signals. So now I'm going to load up the alpha turns up and alpha turns down. So it turns up for the long, turns down for the short. And go ahead and run that. Since the data is already cached, it doesn't have to load it, so it'll go right into it and give us our returns. And as it's running, I can click on the close net profit. You can see it building here. And certainly the alpha signals versus the beta signals off of the cycle are far superior. You can see 11 5-minute bars into the future. On average, you're up $16,850. Let's go back to the detail. And in the detail, so back in the detail, we have 192 instances. And I want to see the average profit. In other words, I want to make sure I have enough money to cover the cost of doing business. So if I left-click on that, you can see at 11 bars out, we're roughly $88 up, or almost 8 ticks on the crude. And then back to detail, there's a number of other metrics we can look at here. Percent winners out of the gate, roughly 4 bars out, we're close to 65% winners. And so this is giving us a good idea. Not only is it showing us that this filter I put on the cycle shows far superior returns than when we're in beta. The alpha, of course, is fleshing out a lot better forecast versus the betas. But it now quantitatively, I can see how much better it is. And each one of these metrics can be clicked on to show a chart. I can go to the profit curve. If you recall, 11 bars out was the actually pristine number of bars out that it was showing the best results. If I go to evaluate parameters, I can actually change the number of bars out to 11. And then this is our equity curve. Again, if you recall, we started on December 1st up until current. And each one of the blue areas is a long position or a long forecast, and each one of the red is a short forecast. And you can see each one pretty much adds a good amount to the equity curve overall. The distribution is a bell-shaped curve of all of the forecasts. And then the summary, if I had a portfolio, this would show the summary for multiple symbols here, but since we're only doing crude, it only shows one thing. And then we've done a really nice job. This is, I think, the nicest addition to this product. I've never seen CQG have this in anywhere else. Is exporting this to Excel adds a lot more functionality than what you get in CQG. I'm going to go ahead and left click on Export to Excel, and that's going to populate the spreadsheet here. And let's go ahead and size that so I can see the tabs at the bottom of the spreadsheet. And so it's pretty much a recap of everything you ran in Signal Evaluator. What's nice is, of course, we can now save this out to a spreadsheet for historical reasons. You can come back to it, at any time and take a look at the metrics versus having to reconstruct the Signal Evaluator. A lot of times I've forgotten exactly what formulas I've used, and I cannot reproduce a run I might have done 6 weeks back. So this is a nice way that you can save your work. You can left click on any of the metrics and it will change the chart at the bottom. There's tabs across the bottom. One of the tabs is formula, so at least this gives you all the information if it's not protected like this particular one is. The data tab at the bottom shows all the results for each one of in this case, the forecasts. The profit curve, in this case, it's 11 bars out. If I left click on sum of 11, I can actually add additional bars out. So if we want to take a look at maybe 5 bars out, which is in red, and we might want to take a look at 20 bars out, which is in green. And of course, then we can do all sorts of sharp calculations and so forth to find which equity curve we like the best here. That's not built into this Excel spreadsheet at this time. And then the distribution at the very end is the bell curve. You can go ahead and pick multiple values. Instead of 11 bars out, we can again pick 5 bars out and show that on the bell curve. The bell curve, what it simply does is it shows us the distribution of the returns if we would have held every one of these forecasts 11 bars into the future. If you put the point of the mouse on, let's go to the one where it says minus $420, out of the entire group of forecasts or signals, this represents 1.6 of them with a $420 loss. If we go to break even, that's 15% of the trades. If we go to 140, that's 15% of the trades. And then, of course, you can see the outliers on either side or the tails. And again, this is, in my opinion, the nicest job they've done in terms of exporting out to Excel and being able to save a lot of your work in Signal Evaluator. For those of you that do not have it, we've got a manual, a backtesting and formula manual that has a chapter devoted to Signal Evaluator that I would be happy to send you if you want to go ahead and just send me an email at doug@cqg.com. Or certainly if you guys have any questions on putting some conditions together and prior to learning our code, certainly give me a call and I'll spend time with you on putting that together. But even though this is a short WebEx, we've covered 2 areas that I am sure most of you have not seen to the full extent that they can be used. And then certainly I'll take any questions. If you have any questions after this WebEx, certainly send them to Doug@CQG.com, and I'll get back to you guys within a day or so. All right, Tom, that's the end of the WebEx.
Okay, so this concludes our webinar. Any unanswered questions, we'll forward to the panelists if you have a afterthought. Oh, you are getting questions?
One more thing.
Okay, sorry.
I was going to say one more thing, and I guess I already showed this off by accident on the first screen. I just got this in the email today. Here's a graphic of high-end technical analysis that I found interesting, that each one of these movies that came out foretold a turning point in the market. So back in '87, Wall Street came out. Boiler Room, which I've seen, came out in 2000. Turned the market. Wall Street came out, which I didn't see this particular one, in 2009. And of course, we've got The Wolf of Wall Street in the theaters right now, and we're sitting on a new high. So this is kind of a fun little graphic that I thought you guys would get a kick out of.
Actually, Doug, we have a couple of questions in, so can you do this on CVB bars?
The Signal Evaluator is, and before I say no, because as I mentioned, they revamped this just recently. Let's take a look, and Tom, it's going to look like it's only minute bars at this point, minute or higher, 1 minute or higher bars.
And then how long of a time period can you run this evaluation over? How much data?
It will go back 15,000 bars, which is a limitation for our back testing. Now, to lift that limitation, there is a setting in our CQG.ini file that, for those of you that would like to get that limitation higher to like 100,000 bars and so forth, send me an email. I don't want to go ahead and open this up and look through the ini file because it takes a few minutes, but I'll send you the how-to on how to change that. But for right now, it's 15,000 bars is the default back in history.
And the Signal Evaluator is part of the CQG IC package, correct?
It is. It's part of the CQG IC package, and it's also part of the KeyTrader package. It used to be in our back testing module of different components, and I got it taken out maybe 5 or 6 years ago because I thought it was such a great component to have in the CQG IC in this case, and now KeyTrader. It certainly allows you to do a lot of what-if testing without having to build a trading system. In truth, it's actually a segue to building a trading system. For a lot of you out there that have signals and conditions that you trade off day in and day out, and you're kind of at that point, well, first off, let's quantify them and see if what I'm seeing on the chart really makes sense. And then if it does, at this point, once you're determined that you've got decent entry points, it's so much easier to go into the back testing and then now build the exits around it. Because if we can't get past this point of saying I've got decent entries, excellent exits aren't going to make a trading system. You have to have that entry point. So if you're a breakout trader, your breakout points have got to show here, decent results. Or if you're a contrarian trader, same thing. You need to see these points of entry giving us positive and enough credence to go ahead and build the exits in the trading system. And I understand most traders might not even ever make it past Signal Evaluator, and that's fine with me too. That's in my trading career. That's as far as I go now. I don't particularly build trading systems. I have these indicators that I trade off of with a discipline of stops and profit objectives based off the channels.
Okay. Well, thank you very much, Doug. This concludes our webinar at this point. As I mentioned at the start, the webinar is recorded, and everyone will receive a link to the recording via the email.
All right, Tom, thanks a lot. And certainly, any questions as I gave up my email, go ahead and send them over to me, or any help you guys need. Thanks a lot. You guys have a good afternoon.
Okay, thanks, everyone.